Welcome back to the only hour you need in the market. We've been crushing it. We were just talking about how some of these outliers are giving you the alpha you need to make money when the IWM is red. We are talking about these companies under $2 billion. And while the IWM is red, these are still green. A few of those notable picks being Jamia, explosive move today. Rocket Lab, steady, Eddie, green. We're going to get into those in just a minute. Let's start off with the SPY. Let's pull this up here and just give a quick little update on where we're at today, because I think that this price action is pretty telling. End of day market on close buying was very strong. We've been talking about this for weeks, dude. I mean, this is no surprise. You look at this chart on the daily. We talked about how this could be this weird resurgence where we just keep on blowing up until we see SPY at 550. I do believe our prediction was made back when we were trading about 515. We did say 530 by June, by the way. I don't know if you remember that, but we did. It was a bold statement, but we said it. 530 by June, bada bing, bada boom. It's been hit. It got nailed right there, June 4th. So huge, well, I guess a little earlier, but 535, we'll call that strength. And we've had some really strong moves in some of these other names. But, just first look on the SPY, what are you feeling here? What are you thinking? What are you seeing?
So first look on the SPY, been very vocal that the 21-day EMA is the key trend to notice of any kind of trend maybe tilting. We've respected that multiple times since the November rally. The one time we breached it was April, and then we called out, all right, well, we should be a little worried. There's some pretty bearish data out there. Let's maneuver what we should do on the market. They broke 21-day EMA, 50-day SMA, just got sliced from the SPY during April. But what happened? V-shaped recovery. Why? Because the appetite is still there in the market. There's trillions of dollars on the sideline, knowing that elections happening later this year, knowing that we're at the part of the cycle where we're going to see rate cuts, not rate hikes, and markets a forward-looking mechanism where nobody knows how forward-looking it is, but they know it's forward-looking. So knowing these multiple tailwinds, people are going to buy the dip. I will call out, my thesis for the summer is the indices won't be going anywhere. If so, it's going to be low volume trend to the right, up and right. The alpha will be in those high beta names, those quality growth names, and especially the names that have the exposure in the SMBs. Why is that? Because clearly we've seen the major enterprises from all the Mag 7 names, or let's just go with Google, Microsoft, and Amazon. You've seen the immediate recovery in their tech recession the past 2 years. We saw that in Q3 of last year. Inevitably, it's going to happen to SMBs, but that lag from top clients, enterprise clients to SMBs, there is a lag. Nobody knows how long, but inevitably, if we're seeing the top enterprise clients have a V-shaped recovery from the tech recession, SMBs is going to happen again too. So I think that's where they're going to catch a bid and have the rate cuts potentially in September. Who knows what else? But I do think market's not going anywhere, and the real alpha won't be in the indices or the Mag 7 names. NVIDIA is excluded. NVIDIA is going to be rocking to 140, in my opinion, sometime this summer, before the election. But the real alpha will be in the high quality growth names, like the software names who've gone destroyed, and everyone's claiming software is dead 2 weeks ago. Guess what? V-shaped recovery. That's just how the game is. That's how the game is. So that's what I think on the SPY. I don't think it's going to breach the 200-day SMA anytime soon. I think there's a massive floor at 480. There's even a bigger floor at 520. I don't know if we'll ever breach that. If we do, Wednesday will be the day for that, because we got heavy hitter data coming out on Wednesday. It's a double header, morning macro data, afternoon data. So Wednesday's gonna be a volatile day, and I think Wednesday might be the tell of where the next direction of this market will be for the summer.
Couldn't agree more. And let's get into it now. I mean, what we talked about just before we started this call, I guess let's tee it up with one that I know you love and hold dear. Let me get this up here, your baby, Jamia. I mean, for those of you that haven't been following this one, you should have. I don't know why you wouldn't be, especially given how things have played out for us so far. You can see here on the chart. I mean, we started talking about Shai's been talking about this for quite a while, well before we brought it up on the stream. I think you were buying $3, correct?
Yeah, under $3.
So you follow him, you already got that. You got that super squeeze juice. On this stream, we were talking when this was trading around $4, $4.15. We've doubled. since then. Since first mentioned, this is doubled. This is double your money, double your fun. Unbelievable breakout. We were talking about this earlier. What do you think? You were sharing with me kind of what your thoughts are on what's going on here. Like, elaborate. Tell the world. Share them. The good news.
Yeah.
Exactly
So
what
first,
you said would happen. Ironically, crazy how that works.
so it's really I miss. There's multiple of tailwinds that happened in Jumia that's causing it to have a 2-year high and clearly breaking out on the chart. One, their chief commercial officer. Guess where he's coming from? Amazon. He is ahead of the UK market of Amazon. He is a chief commercial officer of Jumia. So you connect the dots on what their mentality is towards the commercial side of Africa, getting someone like that from Amazon. And part two, I called it out last week and said I called it for multiple weeks. There's no institutional coverage on Jumia, none, and there hasn't been for quite some time, like over a year or so. Even Os, when he was looking it up and he talked to his person who's handling his money, like his portfolio, he's like, well, "Are you sure you want to invest in it? Because there's no analyst coverage. Like it's essentially a penny stock because there's no estimates. Like how do you judge a company based on no analyst coverage on street? And there's like nothing out there. So why risk the biscuit?" It's because, again, like I feel like I was the only analyst covering this name publicly for over a year, where I was saying diminished solvency risk, cutting in half, quarter after quarter. And this most recent print, I said a month ago, that was the inflection point. I think that was the point that a lot of institutions and a lot of investors are waiting on. Can Jumia have that operating profit by themselves and they don't have to dilute anymore? There's no more solvency risk. And they have an amount of cash on hand to fund its own business until they get to that break even. That happened a month ago. Not just that, on a constant currency basis, they're growing the top line 57%. They were cutting their SG&A 40%. The expenses on the fulfillment went down 30%. All these combination, that's a moat. When you cut spend and you're still increasing the top line close to 60% while finally hitting that profitability on that operating cash flow profitability that quarter, that's a home run type of earnings that now I think a lot of new investors or the institution side, like they want to see the first validation. Like, can you survive that diluting? And does this business actually make sense where you can actually make money? That happened. And guess what I just found out from rumors? They've been meeting all week last week in New York with institutions, essentially having their road, like the road show that IPOs have when they meet with all these hedge funds and like show their business and like, see, we're not the Amazon of Africa from 2 years ago where all we do is spend. There's no profitability in sight. Brand new business. They skim the fat, focus on the high profitable regions in Africa, nail those down, and then they're going to start expanding to the other regions in Africa. That's what's happening. And this morning we got some more rumors. There's going to be more coverage on more analysts are going to cover the stock. Like there's going to be a lot more coverage in a couple of weeks. What do I mean by that? Again, no analyst coverage right now, so there's no buy, sell, hold ratings. It looks like the meetings are going well last week and continuing this week. Clear volume, clear relative outperformance. I do think that the next couple of weeks we're going to get some kind of bullish coverage. And if that happens, looking at this chart, it's going to fly because, again, even though I'm really my edge is in growth tech, I'm still a retail investor. Like nobody's going to respect stock savvy Shay who lives in LA who's 30 years old. But they're going to respect some of these hedge funds who put their $15 price target, $20 price targets out there. And once that happens, it's going to have a flood of investors. Volume's going to go there. It's going to be a combination of tech and fundamental traders coming together. And this is the only e-commerce presence in a region where a lot of the heavy hitters, Alibaba and Amazon, have tried to get into and they failed. Jumia clearly has a moat. And if you guys know the thematic of e-commerce is still going to explode in the rest of the decade. Africa is going to be one of the highest regions ahead of India, where that's the regions that is going to grow the most. So I'm excited. I think it's going to be a $20 stock next year. And I'm not going to make this a 5% position because it's been a multi-bagger for me. It's now the 3% position. I want to wait to that free cash flow positive quarter. But if I was you, everyone listening to this, I would DCA into like I have a multi-bagger, like I have a cushy position where like I am way in the money, so I have the luxury of waiting for that free cash flow positive quarter to like double my position to make it a full 5%. But I wouldn't miss the boat on this because clearly someone's loading it and it's still got a ton of room on the chart to move upwards.
I couldn't agree more. I really, just to kind of quickly reiterate, because I know we've talked about this a bunch, but guys, keep this in mind. They are existing in a segment that is going to be experiencing unprecedented growth in both, I would say, in a B2B context, and that they are going to be developing their business infrastructure just so much as their consumer infrastructure is going to continue to grow and expand. Most importantly, I think discretionary spending is going to be pretty favorable there for quite a while. Again, as most of these jobs that are remote and digital start to move, that's what capitalism is, right? It's buying and selling, it's bidding, it's hitting the ask, it's hitting the bid. It's about where the value is based on the return on that investment. And if you got a guy operating in their region that can do these digital services clean, clear, and delivered for half the cost of what you're going to get in the United States, you're going to go there. And as you go there, you are pumping a lot of money into an economy that hasn't had that kind of inflow for a while, right? Or ever, really. Where do you think that money goes? You know where it goes for us. Take Amazon as your case in point example. Where do you guys spend money? I don't know about you. There's a reason me and my wife don't share an Amazon account. Put it that way. We just don't. Because I don't know what's going on there.
Another tailwind also is Starlink. Starlink is increasing their presence in Africa. And what does that mean? More connectivity for people in an underserved area like Africa is a game changer for a company like Jumia, because if everyone has more access to buy goods on Jumia's marketplace, that's a big uptick on the tailwind for Jumia. So like, it's just like Jumia is succeeding on this level right now when it's underserved on the Starlink or connectivity front, and people aren't making as much money as they will be in a couple of years in this kind of region, because there's going to be an influx of businesses like next 10 years in Africa. Like, it's inevitable. That's 100%. I know that for a fact. So once that happens, that's another tailwind for Jumia. So like, I think what they've been performing the past year or so, that's the worst environment that they're ever experienced. And if they're growing the top line 50+% with that positive profit quarter, if that's the worst it's ever going to be, it's like all uphill, all downhill from here. Wow, the ceiling is just like, this need can move so fast.
We don't know what it is yet.
Yeah,
we won't know. So there you go. There you have it. Let's move on to something a little more fun, a little more topical before we get on to our next pick that we just mentioned, Rocket Lab. Let's talk a little GameStop here. So we all know how this played out. We all know how it panned out. It is unbelievable, the move that we've seen in the market as of right now. So I will say this, full disclosure, I did add a little funny money in today, off the lows at 23.06 or so. I think were the lows. I had about 23.50. So that is a pretty key point here in time for this chart, because it was the gap close that we needed to see right here. We really just needed that gap to get closed all the way, especially off the top of a base range like you see here. You can see that the price really topped out at about 23 and change here, a bunch of times here, and then finally right here, which what that does, it allows us to recapture the move to the upside again. There's so much. I mean, for those of you that watch the Roaring Kitty stream, guys, I think personally, like, it seemed a little unhinged, but I also think the guy was kind of trying to prove a point. I think this is something like very critical. We're going to go full screen for this, so you hear this loud and clear. I love what the guy's doing because I think it's hilarious, because he doesn't care. I generally don't think he cares much about the money as many people may say. I think he's willing to watch it all burn. And I think that his desire to prove a point needs to be highlighted, because it does not align with, I would argue, most of your interests. It doesn't align with mine. I love it. I love being an onlooker. I love the voyeurism of just seeing something. It's like a train wreck. You don't want it to happen. You don't wish ill on anyone involved, but you do keep staring. And why is that? Because we are drawn to freak incidents. We're drawn to catastrophe. We're drawn to chaos. That's what we do as human beings. So I think it's important to remember that because his incentives do not align directly with yours, your money would be not best served following that same incentive. Basically what I'm saying is, I think he's willing to break the market to prove a point, which is a point that should be proven, right? There's just incredible manipulation going on. We all know it. That's not up for debate, right? But for people that are YOLOing their entire retirement account or their entire investment portfolio into this, thinking that he's doing it for the cash, need to understand that key differentiation. That like when we talk about companies like NVIDIA and Jamie, like that's us putting our own money on the line because that's where we think it's going to be best served to grow. Very different. We're showing you the fundamental analysis, the technical analysis, the market research that's involved to demonstrate that we've created our own thesis that we believe to be viable in the current market conditions. And here's why. And we can give you an A, B, and C that is very logical, simple, and easy to understand. There are not institutions who are set to lose billions if Jamia goes up to $10. So we don't have those same kind of headwinds. I'm not going to win that game. I'm just not. Don't have trillions of dollars. So not going to win that game. So keep that in mind, please, as you follow these trades and you follow this madness, because again, most traders I talk to's interests are, I'm going to finally make money on this trade. This guy is putting hundreds of millions of maybe his own money, probably not. I think it's somebody else's. He's putting hundreds of millions of those dollars on the line to prove a fucking point. A cool point, a point that I like to see proven. But again, the intent is to prove the point, not make $1 billion. Now, if he could do that in the process, sure, all good and great. I'm not saying he doesn't want to make money. But what I am saying is I think he's willing to lose a hell of a lot more than you are in the effort to prove the point. And I think that's something that everyone needs to understand when they look at stuff like this. Because on the surface, it just looks like best opportunity ever to make money. And the story's so great. Everyone loves the hero story. Who doesn't want to see the hedge funds burn? So you're being used and manipulated. And quite often, more than not by him, but by the funds that are shorting against your position in order to make money. They want you to believe. Because it's a zero-sum game. So I don't know if you have any thoughts on that. I just feel like that needed to be said, given what we're experiencing right now.
Really well said. And if you want to actually, this time last month, there's no fundamental angle I can create for GameStop. Dead company, dinosaur in a brick and mortar, just like no place in the modern world. Now, 4D vision, I could see like a small chance of if it squeezes again, they dilute at $50 or $60. Now they have a $3 to $4 billion cash position. That's a different story than what it was a month ago, because $3 to $4 billion, yes, like solvency risk is still really high, but you can do something now about your business model, or like what do you want to pivot towards with $3 billion of cash. Like there's something you can do as like the last breath of like survival with Ryan as a like. Who knows? Like maybe they buy Bitcoin, and once Bitcoin gets $100,000, they become some kind of holding company. And now they kind of can pay off their debt with this crypto angle. Or I don't know, like they close some of their stores and outsource it for supercharging station for Tesla. Like there's a lot of optionality where they're burning, like, I think $250 million a quarter with $3 billion in cash. Like there is somewhat of a runway now where they could do something. So that's an angle of like, oh, if this goes in the teens with $3 billion of cash, this becomes a little on the cheaper side that it could make some kind of move. Also, caveat, like July is a heavy retailer trading month. Institutions are gone. They're in a beach house somewhere. They're just taking that whole month off. That's why the month of July is heavily in retail trades. Like we see a lot of volatility and short squeeze names. Retailers primarily have the most of the volume that month. So GameStop was still kind of like having these up and downs, and they dilute again, let's just say in the 50s or 60s. There's a theory, there's a option, there's a world where like that hits 100 in July potentially, because there's just all retail trading. So that's an interesting, again, like those are my 2 cents. Like a month ago, I'd be like, you're delusional that GameStop has any kind of place in this world. But like now, there is a Hail Mary chance that maybe they survive and they pivot with that much of a cash position in the summer months. Is very volatile. Who knows?
I agree. I mean, it gives them opportunity. And like, you guys got to also remember that it's like, dude, I love GameStop. I mean, it's all of our childhoods, but here's the problem.
Yeah.
And it's better for you that GameStop exists in its function as a reselling marketplace for games, right? So in the move to games going digital, use your brain. Anything you can move to a cloud becomes infinitely cheaper, especially when you're at scale. I mean, what Microsoft and Xbox can do at scale is far beyond your wildest dreams. Cost them nothing, right? Get rid of all those manufacturing and distro facilities. You can scrap it all, right? That's hard assets, depreciative assets that aren't going to retain their value. Whereas they can move to a cloud-based system that does one thing perfectly. So let me ask you this, Shay. I don't know if you remember this back in the day, right? But like, let's say you had a game that was like, you loved it, right? Absolutely sick. Your boys had it, and like you wanted to try it because you didn't really want to buy it, right? Oh yeah, you could take it for a week. Just don't fuck with my save data, right?
Yeah.
Like that was the deal. And you'd go pop it in your PS3, whatever, play it. If you like it, you could pop over to GameStop, buy it for a third of the price. Used. They robbed you of your ability to transact in a secondary marketplace condition any of these game titles. Like, so their big money, big businesses incentive is to destroy GameStop because they have a much more profitable model, which is everybody now paying for a digital copy, which, surprise, surprise, costs them significantly less to produce because there's no physical copy. There's not nearly as much artwork to be produced and printed. It doesn't exist, right? They're not paying at a different margin. Like when they're selling games wholesale to Walmart, GameStop, Best Buy, they're not selling them at retail price. They're selling them at wholesale price. So they're making less money. Now, with the advent of the digital store, they can sell to everyone all at once at full retail price.
Jesus. Damn.
And the best part is, instead of releasing updates to serve, because now also in the world we live in, they could effectively update games and they would never need to buy another one. You think they're going to do that? Hell no. Fortnite figured it out. They're like, okay, we're not going to sell you another game, but we will resell you our game every quarter or whatever their battle pass bullshit is. We're going to hit you for another $10 every couple months for the new season, right? So instead, what have they done? They've accomplished one thing perfectly. You basically are buying the game full MSRP and then some every single year in perpetuity.
Wow.
Beautiful. I mean, it's evil, but it was genius. So keep that in mind when you think about places like GameStop. Like, it was a beautiful resellers marketplace, like where you could really get games and kind of games can be reinvented, you know, in people's minds, and consumers can find old titles they hadn't played yet, whatever, and they could also buy them at a fraction of the price. But who doesn't get a cent of that sale? Microsoft doesn't. Xbox doesn't. Ubisoft doesn't. Bungie doesn't. All the big game houses don't make anything. Versus now, you buy the DLC or the new update, and they get paid again and again and again and again. So, like, the business was never going to work.
Mm-hmm.
It should. Like, I'd love to kill the whole online title. I'd kill it. But you can't. It's here. So keep that in mind, too, when you think about it as a business, right?
Mm-hmm.
It's crazy, man. It's crazy, and you can't do it anymore. So that's GameStop. And just give you a quick bridge of the view of that chart before we get into the SPY here, because I do want to outline kind of the upcoming weeks. You guys can have your options trades. We got to see this $23 range hold. If it doesn't, this is dead in the water. We were messing around day trading this on Friday. You can see a clear top of range here. What you need to see is this to hold, and then we need to trade back up to 27 and break up if you want this to continue to swing and make you money. Again, I threw some funny money in here. It's money I'm absolutely 1,000% willing to lose day in, day out. It's not a lot of money for my size of account. So if you're trading with $1,000, that would look like $10. $10. Buy coffee, it's $7, $8. Throw it into this instead as a Hail Mary to see what happens. That's what I'm doing. But past that, it's 27, then it's 36. Those are really the key levels. Anything in between is just going to be noise and nonsense. Again, the whole thesis before this is that he bought those calls expiring end of June, and that price would run into that close. Personally, they're incentivized to drive price below that strike. So they're incentivized to drive it below $20, which don't believe that they won't spend as many millions as they have to accomplish that. Part of me thinks his whole thesis is that he owns enough of the float that if the calls were needed to be exercised, which secondary issue, does he have the cash to cover? I don't know. I mean, because without that, it's kind of pointless, right?
Mm-hmm.
Without having the cash to cover. Now, if he did exercise all those calls on top of the position, I would say that you do have a really interesting theory here. Because if there are like 140% of the float in phantom shares, whatever, and he calls in over 10% of that float into his own account, that's a pretty large stockpile to manage. And if you take into account all the retail investors that are holding this, that poses a significant issue for any and all people that have shorted shares that don't exist. And for those that don't know, the brokerages don't give a shit. The government doesn't give a shit that they're shorting shares that don't exist because they can tax that money.
Mm-hmm.
And usually when they're doing this, the company goes to zero anyway. So nobody ever looks to say, hey, were those shares even real? Because it doesn't matter. It just doesn't matter. So keep that in mind when you're watching GameStop so that you don't get flayed, because it shouldn't happen to you. We've outlined all the targets. We took, like, I don't know, some Porter posted like 300% on that last trade. We outlined all the take profit targets that we had. We outlined all the sports resistances, and that trade went for unbelievable profit, with a max risk of 2.98%. That's what we're risking on that trade, by the way. So there is no YOLO. There is no all in. We're not doing any of that nonsense. So let's kick it over to the SPY. Let's take a look at our options analysis, and let's give you your bullish and bearish trades before we break into Rocket Lab here and NVIDIA and talk a little bit about post-split. And I think then we'll get into a little smash or pass. You guys put your tickers out, start keeping them top of mind, drop a comment with your ticker, and we'll get into it when the time comes. So the SPY has done pretty well here. Again, exactly on target with what we anticipated, hitting over 530 by June. You can see that it's really starting to isolate this 535 plus range. You want to see that continue. As we watch throughout the week, we're going to see one of two things. Either we are going to see a breakout over 536, and at which point we are going to be trading toward, I would say, probably a $4 move, which means we would be looking to go to about 539 and change. We have never broken that high. So again, there's no functional resistance there. We're going to slip this over. So on the bullish trade, again, just to reiterate, we'd be looking for, let me draw this out, a test and a confirmation that we break above 536.35. That's the top of this range right here. If we do break above, then the trade to 539 becomes really attractive. So we're going to go in and look at the actual contracts. Okay, well, there you go. For anybody that took the Robinhood trade, congratulations. We're up 731%. So Kobe, that's some good stuff. That's been a fun one. That's made us a lot of money. If you're not getting those trades, the link's at the bottom to join the Discord to get in there. You can follow both of me and Shai's trade alerts in that Discord. And in just a few weeks, we'll have something very special coming along for everybody following Mr. Stock Savvy here. He will be putting together something really cool for you. I don't want to blow a surprise, so we'll just wait until then. But you're going to love it. You're going to have the capability to invest like he does, strategy and all. So I think you guys are going to make a stupid amount of money. So we're looking at 539. Remember, we always want to go 3 weeks out, so we're going to target June 28th. Add that to the watch list. Good delta there. Open interest isn't great, but we'll take it. Implied volatility very low, which means that we have the opportunity to make more, even if it trades sideways as implied volatility grows. So looking at this as it stands, it's trading for about $3.36 right now. So again, to flip back to the chart, if we get the confirmation on the 15-minute chart, so this candle breaks above and then comes down and touches support here, and then the new candle opens above 536 and change, that would be our confirmation, to which we'd trade to 539. It should be an easy move, and that's our bullish scenario. So our bearish scenario would look pretty simple in that we would basically be looking at, let me get rid of these off here. We'd basically be looking at a retest of what we've already seen. So if we can't hold 534.90, so if we break below 534.90 and we push back up and get rejected, which means we have bearish confirmation, we are looking for this to come back down to probably at least 533. So it's not a huge move, so I don't think there's really too much to trade. The only opportunity really exists if we get the same sell-off we got right here all the way down to 531. So to put it simply, we're going to keep the expiration the same. We're going to go to puts. The trade that I really like here, if we take one at all, I don't love the bearish trade right now. I would say that we go 532. And I would say that we take that only if we get rejected here, but we watch it with a tight stop loss on the anticipation that we're going to get a huge range cleaner like we did right here, all the way down to 531. Now, I don't think that's as likely, but I wanted you to have the trade locked and loaded anyway. So that way, no matter what, the SPY goes up, you have the trade. The SPY goes down, you have the trade. You guys are making money either way. We did talk a little bit about it before we wrap up SPY here. I mean, what do you think we expect to see the week ahead with jobless, FOMC? Like, do you think there's going to be anything shocking that's going to put the market on tilt?
Yeah, so I called it out earlier. I mean, Wednesday. First off, tomorrow we have the 10-year auction. So if you guys haven't followed the auction, it's been pretty bad the past couple weeks. It hasn't really moved the market as much as I believe it should, but that just shows the appetite out there. So tomorrow's the 10 years. So that's a big one. It's at 10 a.m. Oracle is reporting after the bell tomorrow, so that's going to affect some tech stocks, specifically database companies, so like MongoDB, etc. But Wednesday is the mecca of this week. We have CPI in the morning. That's a major mover every single time that it comes out. Not just the CPI. We have the 11 a.m. Fed rate decision come out. So boom, CPI and the Fed meeting. And not just that, we have the dot plot coming out on Wednesday as well, which is like a big mover for the market. So like Wednesday is going to be a massive, massive day. Like I'm not going to like sugarcoat it. Like it's going to be volatile. And you see that in the option chain. So like if you do any kind of four day this week expiring Friday, you see there's some premium juice on there because there's a lot of catalysts that's going to happen this week. Is there anything gonna be trend breaking? I doubtful. I mean, nobody's anticipating a rate cut this week at all. The dot plot's gonna be very key on like how many rate cuts going forward, any new assumptions they made. Again, track the 21-day EMA. If you guys want me to give you a number right now where that is at, it won't move too much until then.
You want to put your chart up because for some reason it doesn't show up on mine.
Yeah, so let me pull this up. Shoots. Oh, wait,
Oh, froze. Oh, and he cut out. Froze and cut out. And he's back. So give it just a second.
What's up, everyone? Sorry, my VPN just cut out. Yeah, I won't be able to share it, but just it's 528 is a key level, so watch out for that on this week. If we again, if it's a lot of people I'm talking to are anticipating a 2% downward move one day, sometime this week. Like we're due for some kind of flush. Why? This rally it's not the kind of rally you'd want to see. It's low volume, just fading to the right, up to the right. So there's no confidence that this is like a new trend or next leg in the rally. So counteracting that, like anytime downward days we've had, there's been no follow through on volume as well. So like there's just no volume in general. But I wouldn't be surprised if we get some 2% move day because I forgot the stat I saw out there. It's way overdue for that one brutal 2% red day for SPY. It's absolutely way overdue. I'm not going to say we're going to get there, but if there was any week for that to happen, on the weekly chart, we are overbought in the SPY on the weekly chart, relative strength being at 71. Major catalysts that are happening on Wednesday. Like I could see Thursday, maybe even Friday, just being a really bloody day. But again, 528 is the key level. If we hold that, everything is good. It's not a big deal if we just go down to 528. After that, 520 is a massive, massive volume shelf. So like if that's to break 520, I do think we retested 50-day at 518. And if that breaks, something had to get brought up to spotlight on like some trend breaking that's resulting in a trend breaking. Maybe it's the election noise coming to the market because that's so close, 5 months away. Who knows? But those are the levels I'm watching.
So Porter asked, and this is definitely a big question for you, what is likely to happen with interest rates? Said I'd imagine banks are suffering in correlation to the market dropping. Would like to understand it more in depth.
So the interest rates, the biggest thing is growth. I think growth will catch a bid once that first cut happens. But I'm in the minority in this. But if the Fed does cut rates, I am a little bearish because we don't need it right now. I really like everything is doing well. Like I will love higher for longer because clearly spending appetite is still there enough where like cutting too quickly, that might just like result in, I don't know, like reigniting inflation going up even higher. And that's catastrophic. Like that's absolutely catastrophic if we get reinflation. So I do think that growth would catch a bid, but the first rate cut, I wouldn't assume that's the beginning of a new cycle. I really do think that first rate cut from the Feds will just be, let's see how the market digests it. I think we should cut it once. I'm not going to say we're going to do the next couple Fed meetings.
Yeah.
I could see a world where September's a rate cut, and then they're going to let the election play out. Maybe in December, but highly doubtful. The
No
option
president
chain
coming out the gate.
yeah, not at all. And also the option chain, there's a weird divergence happening where there's some volatility priced into the premium for January. That's unusual. This
Can't hear you. Can you guys hear him? I couldn't hear you.
Sorry, you broke up.
I wasn't able to hear you. Cut out. Why that would be unprecedented for January.
January is a dead month. Like January and February, not much happens. Like sure, maybe the first 100 days of the new presidency, like that's might be priced in, but like it's way more priced in than it was 4 years ago during that January month. And like that's when there's like Trump refused to leave and like all that stuff. Like I something weird is happening on the market makers in January. I don't know what. Maybe it's just I'm noticing some wonkiness that's not really there. But January's I wouldn't buy some puts in January because that premium is it's expensive for what it actually is. So December 20th specifically, that's the dirt cheap expiration date if you want some kind of hedge to protect yourself in an election, or the SPY's up 12% this year and you're not buying that's going to be that high at the NV, or you think it's going to be some kind of correction. That's the only way I play it. But again, don't poke holes into something that's working. Like there's clearly a trend and there's clearly appetite out there. You're just going to be draining the delta on your option chains by hedging, and you're just going to lose money and you're going to miss out on some winners. So that's just my 2 cents. But again, this week Wednesday's a massive day. So there's like when Austin and I will talk on Friday during our sessions, like it might be a completely different landscape than what we are right now. That's just how volatile Wednesday will be. There's like three major catalysts on that day alone, and it's just gonna be a volatile day.
I agree. So let's talk real quick about the darling in the market. I mean, unbelievable. Forward split 10-1 for every 10 shares, or for every 1 share you got 10. Forward splits are often a very good thing in the market. It means the market wants more of it. The price is too high, and it allows for expanding the scope of investor that can afford to get in a name like NVIDIA. You mentioned earlier a run to 140. I think that you're spot on. I think that there's at least another 30% upside here, given what we've seen thus far. And just following like simple trend to upside, we've held this top end range.
You're not sharing your screen. We got to see your screen.
I wasn't sharing my screen. So looking at what we've seen so far, you talked about that 140 right there. We've held this trend very well. Top half pivot really showing strength in the last couple weeks. Again, price above typically means we're seeing a sharper move up. We consolidated a little bit right here all the way through May, and then boomed on our way back up. And now we're just continuing more of the same to the upside. Nice bullish engulfing right here at the open. I think there was a lot of fear around price on NVIDIA as we split forward, because usually you'll see kind of some sideways consolidation and then downside for a while, looking back at examples like Tesla and Apple. But I would say that NVIDIA is a monster in and of itself, and it's a different animal altogether. I don't think we're going to see the same moves that we've seen on some of these other names, personally.
No, I agree with you as well. And I do want to caution people, like, don't buy options in NVIDIA this week. The way splits work, the option chains need to be filled with volume in order to like get the actual accurate.
Yep.
I'm not gonna get into it. It's just like there's a lot of like gamma alpha that needs to be like put together in an option chain once you split, because it's brand new volume. It doesn't exist anymore. Like it's just a lot of market maker mechanics that you just don't want to like deal with as a headwind. Where like it's juiced up right now because there's not enough fill to fill those option chains. So like wait until that happens. NVIDIA's not going anywhere this week. Maybe not even next week. Like just wait on the sidelines. Like fine, maybe you miss on a 5% move, but it's not worth just like paying a stupid amount for an option that's just going to get re-rated in 2 weeks once the option chains get filled and volatility is going to go lower. Like don't be that schmuck who loses 20% on NVIDIA where it doesn't go anywhere just because you assume like you bought way too early. Like the stock will not go anywhere for a couple weeks, in my opinion, but like just wait it out until the option chain gets filled. I learned that the hard way when I was in my early 20s. Like I always tell people, like stock split, stay on silence for a couple weeks until it normalizes, the option chain fills.
I couldn't agree more. I do have a quick question. So wait, what happens in those forward splits if you have an uneven amount of shares?
So that's what happened with gamma squeezes. So that's Tesla.
1%. I'm thinking
Tesla's
reverse split.
Yeah, I assumed I knew what you meant. Tesla's the only one in recent memory where like they had that moment of like gamma squeeze. It's because so many people were filling like 10 to 15% calls like out of the money for like that week, and because of that, the volume was there and it was just filling. That's when it worked. Like generally, that's not the case. We haven't seen it with NVIDIA. There is an double or triple leverage NVIDIA, NVDL, I think it's called, where if you do want to get some kind of alpha about trading NVIDIA, like you don't have to do the options of it. There's double, triple leverage ETFs like NVDL is the ticker. Like play that until the option chain normalizes. Like there's ways of getting alpha in NVIDIA without just buying NVIDIA's common stock. Like there's so ton out there. So like look out for that. It's just don't be that schmuck who just loses 20% for no reason.
Pretty much. So, all right, that's NVIDIA. Now let's talk about another one that's been absolutely booming. Rocket Lab, dude. Look at this beautiful boy.
Dude, put Rocket Lab on the monthly chart. That's even more pretty. It's like clearly breaking out on the monthly chart with volume.
Oh, yeah. Beautiful little base right there, 380s, which, guys, we got the buys filled in the 360s, 370s, 380s. So you're welcome is basically what we're trying to say here.
And look at that volume in the month of May. Wow, stock didn't move anywhere. That's accumulation and basing in an anemic month of May in the market. Like there is no volume. You can tell from the Rocket Lab right there. And guess what Austin and I started talking about a month ago, ahead of the accumulation volume. Like
right
this
there.
Palantir in the 8s, exact same chart as Rocket Lab in the 4s. Like this is a space economy industry that's just in the early innings. It's just getting started. There's only 2 players out there. There's only one publicly traded company out there you can ride this wave in. It's Rocket Lab. And if you guys don't know the story, I've gone into it. I'm not going to beat a dead horse, but like they're not just a satellite company. They're a full-on space prime. They're going to own the end-to-end services, riding the coattails of SpaceX. It's such an early economy, the space economy, where like 2 players can just sort of ride that wave. There's more than enough room, not just for SpaceX, for Rocket Lab to be the Robin to SpaceX's Batman. And I do think it's going to start catching a bit. It doesn't belong under 5. To be honest, like the way like the lack of competitors in this like space economy, if you look at Kathy Wood's research, or like I don't agree with her picks, but the research her team provides is like, mwah, it's perfect. Space economy is going to be a massive TAM for the next like 20, 30 years. If Rocket Lab has a first mover advantage and are worth less than $2 billion in a TAM that's going to be potentially $500 billion in like 10 years, like do the math. Like this is going to be a mid cap and high tide result boats, 10xer. Like give it time. Once it breaks, it's going to break like the way Jumia broke, and it's just going to just fly.
It's going to be wild, man. And to give you a little more in-depth on the targets we highlighted, we wanted to see a full retracement to the golden mean. That's 0.61 on the fib. That's 1450. Just getting that alone puts us up over 200%, guys. Just that. Now, we break that and we enter new trend. So basically the trend flips on its head, becomes bullish. If we break above it, we're heading to $32. So that's almost 10. That's almost 10 bagger. Again, there's no guarantee. I'm not saying it's going to happen, but what I am saying is that this looks delightful, and everything about it says adventure and prestige and profit to me personally. So sorry, I had NVIDIA up there, so it's Rocket Lab. But basically, you're buying this bottom feeder base with potential of double, triple your money. We're already up a nice 15, 20% now. I think that we're just going to see continuation here. And to the darling of the day, as we move along here and we get to the tickers you want to see, let's wrap this up with Jamia. Unbelievable. Just to recap that one more time, guys. 105% move to the upside since we started talking about this, with potential for a hell of a lot more. Do not sleep on this. Do not miss this. Research at your own devices. Again, you can just go back and watch the streams. We've talked about this 10 times over to get into it. So looks like we got a few Breckle. Pretty much now's your time to drop your tickers. What do you want to see? Drop the ticker in the chat. We'll bring it up and we'll take a closer look. We're going to start with Breckle here because there's only one. Spotify. I don't think we've ever talked about this one personally.
So Spotify is an interesting name. So I think the juices are even squeezed on Spotify on the fundamental story because they've had a margin expansion on cutting the OpEx and increasing the fee, the monthly subscription fee. So like they're continually doing that. There was a time to get into the stock when was it the low 100s when people were worried about their moat, like Apple Music. Like, is that going to start taking away their moat? Like essentially the Apple and Amazon issue. Like whenever they enter any kind of realm of tech, like everyone's worried about like, oh, like Spotify's gonna be obsolete, or like anyone who's in that existing arena is gonna be obsolete. Clearly, that's not the case. Like nobody's leaving Spotify. Minimal churn when Apple Music came, and they proved their moat during that time because they had that margin expansion story, cutting their sales and marketing, cutting their OpEx while increasing the pay, and there was minimal churn. They proved their moats. They're a leader in the specific realm, their industry. Having said that, easy money's been made. The chart looks great and bullish, but like it really needs to clear 320-ish, I think. But I don't invest in companies that have lower than 30% gross margin. Doesn't scale well. You don't make enough earnings. Like doesn't matter if they make like $20 billion at the end of the day. Like you're probably gonna make max $1.5 billion of actual earnings from that. And like at the end of the day, that's just not where I want to be. Like I don't know why Spotify. I do know why. It's just because the industry is really messed up. Music industry, they have to pay a ton of like fees just to have their music on their platform. But that's just like there's better opportunities out there. Like the juice has been squeezed. Like even if they grow the top line like low teens for the next 5 years, it doesn't matter because there's not that much earnings growth because their gross margins are below 30%.
Yeah, and from a technical perspective, this is pretty much just run dry, guys. You can see it's struggling to push past 311. I mean, it's hell of runs in less than a year and a half. You're talking it's tripled, more than that, 300% run. So keep that in mind. I personally don't think there's much left on the table here, especially when you get this little inverted hammer guy here. That's almost a guarantee of reversal. So I'd say watch this around 240. If the story changes, there might be opportunity to buy, but I would say that's definitely going to be a pass for me right now. The opportunity is far better elsewhere. COP, I don't even know what the hell this is. ConocoPhillips, bada bing. I mean, they do mostly consumer products now, right? Isn't that pretty much the whole deal at this point?
Yeah, I mean, this is not my lane. It's a commodity. I think they had a merger deal with Marathon. So like I don't know if they're gonna be. I could be wrong. I'm pretty sure they had a merger deal with Marathon, and just that's why you
no
saw
matter
that
how you cut it. No matter how you cut it, trend's dead. So I'll just tell you right now, that's going to be a pass for me. More opportunity, better opportunity. A lot of these old giants are the ones that I would be wary of. The big names in industrials and the old school value play. I don't know. Companies just can function so lean now with just incredible margins that getting into something with an 8% margin just doesn't make a whole lot of sense to me personally.
No, you're right.
Kinde, what's up, my friend? Let's get into Apple for you.
All right, so the Apple event was today. Did you follow it? Yeah.
No.
So I can give you a 10,000-foot view. Apple just waved the towel on AI. They're essentially outsourcing it to OpenAI, which is fine. That's great. Apple isn't really an innovator. That's not why you invest in Apple. They financially engineer shareholder returns. What do I mean by that? They essentially just buy back stock with their stupid cash pile. And you know the real winners of today? What's the company powering Apple and Microsoft now? OpenAI. That's gonna be a
Yep.
monster company, like powering the AI of Microsoft and Apple. Like, doesn't matter if LLMs will be commoditized, which I think it will be. OpenAI will be the king of it. Like, will be the king. And Apple did wave this flag today on essentially being part of the AI race. Like, there's gonna be the picks and shovel. Like, let all the Geminis, the Chat GPTs, like the Llamas, like they all figure out their stuff, and we'll be the ecosystem, essentially create an operating system of all of these AI applications, which is fine. That's kind of how they are. Like, we can't create the hardware. We'll have everyone else create the hardware components of it. We'll create the ecosystem. We'll benefit from it by charging a 30% fee. That's how it is. Apple, I'm shocked that Apple didn't hit 200 before today's events. I did think it would run up to all-time highs and like break that 200 psychological level. We didn't hit it. I do see a retrace happening in Apple because their next event is in September, which is the hardware presentation. That's where, like, if you're a techie, you know, like the hardware is the component of like Apple. Like, whoa, what can they do with AI? Like today was all software. Everyone and their mothers knew like Siri was gonna get some kind of AI makeover. That's what we got today. We got some weird tweaks on like their applications on their phone that looks it's more efficient, makes all the lives easier, but it's nothing gonna be moving the needle on like, is Apple gonna be a growth company next couple of years? Like, I don't think so. We'll know more in the hardware event in September, but until then, like they didn't break the 200 level. We kind of have a triple top. I see us fading a bit and fading a bit throughout the summer. Like I said, indices won't be moving. I don't think any of the Max 7 names will be moving much except for NVIDIA. And we'll see then, but that's just my 2 cents on Apple.
Yeah, that iPad calculator thing does look pretty nuts. I looked at that a little bit on Twitter. Who would have thought? But yeah, you know, it's a little disappointing. I was really kind of hoping that this would be like their Steve Jobs moment. You know what I mean? Where they go, and you know he would have. You'd have said, "Fuck it, let's do it." So it's a little disappointing to see like the kind of, I don't know, the hallmark for innovation decide to become not that. I mean, I get it. If which I would have no idea what I was doing, but if I was running an Apple and we're doing what we're doing, and we can have somebody else do the legwork while we're just producing ridiculous cash flow with what we're doing, I get it. I get it. But it just would have been cool to see. So DraftKings, let's get to betting now. This chart does not look friendly at all. I'd say quite the opposite. Trend was lost. My long-term target was $48. That's already been hit off the lows of 13. So I'm about spoken out on this one. I don't know how you feel about it. I mean, it's a sad industry to watch explode. And I think that the tether between sports themselves and the betting is just going to continue to strengthen to where they're like synonymous. It's one and the same. Like you're going to be, because even my 12-year-old's talking about it and it bothers the shit out of me because myself and our intern, Zachary, were talking about this. Like trading is wonderful because you can define your own risk. Gambling is quite the opposite. You have no definition of risk and you can't claw anything back. If a company changes their proposition fundamentally of what they're going to do or key leadership, I might lose a little money, but I take that money right back and I put it into cash. With a bet, I don't get to say, hey, you know, can you buy that bet back for me that's clearly going to go to zero, much like options give, but without the ability of a secondary market? Can you buy that bet back from me that isn't going to work out?
So my take on DraftKings, I've been very open about it. I don't see a long-term moats. Highly polarizing statement right here. I used to, first off, DraftKings has done much better than I thought they were capable of. Why? I mean, I used to think that sports gambling didn't really offer any kind of sustainable competitive advantage because like of the constant hefty marketing spend, and there's not much of a moat because like I'm not loyal to DraftKings. I'll go to any platform that gives me any kind of signing bonus because again, degenerates are gambling. Like I could care less about loyalty. Like I want my buck. Clearly, DraftKings has been able to maneuver with their market share by like reducing their marketing expense while continuing to expand their market presence. Okay, that is a moat. I'm still on the boat where not if gambling becomes federally legal, DraftKings will lose their moat. Anyone can create these DraftKings there's betting applications, MGM, Amazon, like all these major players, like can just create their own gambling. Like, let me retrace. Like Netflix and Amazon, they're getting into live sports. Everyone wants to get into live sports. Like even Warner Brothers. Like, you don't think they're all going to create their own gambling app to infuse into that ecosystem of live sports? You're delusional.
Yep.
And because of that, like once it becomes federally legal, there's gonna be so much more competition where DraftKings, yes, they're the market leader. It's gonna dwindle down. And you know what they're gonna do while they see their market share dwindling down? They're gonna spend more on like marketing promotions. And inevitably there's gonna be no margin expansion or earning growth. And
unless
it's just
they went on an acquisition spree. But I don't think they have the money to do what they need to do.
nobody wants as an investor, you don't like that either. Like land expanding via acquisitions, it's a dangerous route. Like it doesn't prove any kind of moat. So like I think that easy money's been made in DraftKings. Like it's one of those like interesting things that like if it becomes widespread popularity, it's actually going to hurt them in the long run because of the competition. It's a weird thing to say. Yep. I just think I would get out of it. It's a very commoditized industry. It's very similar to telehealth. Like just get out, in my opinion. But again, I'm wrong. Like, a lot of people, a lot of investors I respect, they're bullish on it long term. I just don't see it, and I'm not going to force myself to buy it when I see Snowflake under 130.
Now, here's an interesting one. Snapchat. I don't know if you've seen any of their marketing lately. They're almost trying to become the anti-social media. As weird as that is.
So I used to work at Snapchat and corporate strategy. Funny story.
Didn't know that.
Yeah, for not too long, because it's a shit show of a it's a shit show. Evan is a shit show CEO. But Snapchat, listen, there's better ad tech plays. Like only way Snapchat gets a bid is an ad because of the election year. So like you're seeing AppLovin kill it, you're seeing Trade Desk kill it, Magnite's killing it, PubMatic's killing it. Snapchat's gonna catch a bid because it belongs in that ad tech tailwind narrative. But end of the day, when you're this size, you're growing. You grew 0.1% last year with a 1% free cash flow margin at this stage of their maturity. Like that's embarrassing. And their SBC is through the roof. I just don't bother. It doesn't make sense. It's a poorly run company. It's going to get acquired eventually. There's no space in there in the modern world with that kind of leadership. Evan, the way the shares are structured, like he will never be ousted as CEO. Like unless he resigns himself. Like nobody can oust him. He has stupid amount of majority voting power. Like he's always going to be CEO, and he does not give an F about shareholders at all. I've seen it. Like I'm telling you, like he does not care. So I'd take your money out of there. Maybe this year is a good trade. Like, but they kill you on earnings because earnings is when you can't fake it anymore. And they essentially lift the hood and you see how much of a shit show it is.
It's sad because I think if they leaned all in on the augmented reality stuff, they could become something.
Oh my God. 100%. Agreed.
Never understood that. The first time I saw that with the plants thing, I was like, holy shit, that's really cool. It's like a better version of what Google Lens wants to. Well, Google Lens now has improved, but the point is like, you don't even have to search anymore. You can just snap a picture and find it. And I think if they were to tailor that into fashion and media, they would be a giant. Like you talk about ad tech, I don't even think about it in the traditional sense. I'll never forget, I was watching a show with my wife and she was like, go to some weird website. She was like, I love her shirt. And she found the exact shirt by like searching some website, whatever, it tells you exactly what the person wore on the TV show, blah, blah, blah. And it was like an affiliate thing. Snapchat could take that far and beyond to the next level where you take a picture of that episode, right? They could have like a multimedia landing page that not only they could sell to that show for promo and ad spot, but they could also sell to competing networks to get that ad space. They could then sell their own relationship to the customer to then these clothing manufacturers, right? To create their own like kind of, I think at scale affiliate system where it becomes almost a marketplace, all leveraging their augmented reality capability.
No, they could do some. Snapchat has a moat because people come back to extend their streak of Snapchatting these people they've done for like 5-6 years. Like the daily active users is stupid. Like they could do so much to leverage that to like everything is called out. I just don't think Evan cares. That's the issue. Like he's so satisfied with where it is right now. He's raking in, and you're never going to get some kind of big shot to come in to kind of disrupt the business. Like, oh, I'm going to hostile takeover because he has a majority voting power. Like nobody can touch him. He's like on a pedestal. Like because of that, nobody's going to try to shake up the business, and it's just going to be a dormant business. But it's sad. They could have had so much. They had a first mover advantage to that type of social media niche, and they just did nothing with it.
That's disappointing and depressing. So it's always been on the table. They just don't do it. So let's go to Shaquille, who wants to hear it.
Oh,
They've all been waiting for. So what do you think?
I added 10% on Friday. I added 10% today. All right. So Snow, first off, data leak. That's the one data breach. That's the one I always get. I think it's a little worrisome, but I think there's a lot of FUD around it though. I think it's like, I wish that didn't happen, but I don't think it's as bad as what all the FUD makers are saying it's out to be. Why? They haven't filed a 6K. If it's that bad, you are legally required for the SEC to have some kind of filing. They haven't done that. And it's not something that's been done like the breach hasn't happened like last week or the week before. It happened in April. So like, again, you're legally required to do a filing on a major breach if it happened that long ago. It hasn't happened. And not just that, they didn't comment on it at all on their investor day just last week. So like, I think it's like worrisome if it happened, but end of the day, like unless they did a filing or made some major comment on it, like it's just FUD because price follows sentiment and the price is clearly going lower and lower. The sentiment is going to be world's on fire on Snowflake. It's not a data warehouse. It's not an AI player. It's not a data warehouse company. Like a perfect example is I made a post today. I was like, NVIDIA 5 years ago, nobody believed they were going to be a mega cap company. Nobody. Why? Because all they believed it was just a gaming chip company, and that was like essentially their ceiling. Guess what? It's been up 3,200% since then because clearly that's not the only application for NVIDIA's product. Like it's endless. It's a whole digital economy. Snowflake, I'm not going to say it's going to go up 3,200%, but there's a similar narrative disconnect happening with Snowflake right now, where people are just merely labeling it as a data warehouse company, but clearly they're not understanding how transformative it's going to be for the whole enterprise AI space. Why do I believe it's going to be transformative? Is because I have anecdotal evidence in 3 completely separate industries and corporate strategy at a high up level, how important Snowflake is for the use, for the business uses, for all the enterprises like life cycle. Like it's absolutely vital. And the data sharing component of Snowflake is severely underappreciated. And that's excluding the AI go-to-market products. Like I'm not going to even talk about the AI products yet because it just happened, started 3 months ago. Early innings. I do think Cortex is going to be a game changer. What Databricks acquired, the $2 billion company, Tabular, to just compete with what Snowflake just essentially created in-house. Like that just shows you the moat that Snowflake has. But the data sharing component of Snowflake is severely underappreciated, and it's going to be everyone's going to find out about it in 4 to 5 years. And like, wow, I didn't realize how important data sharing is going to be between enterprises in the next 5 years. But it's going to be vital. And Snowflake has 35% of the Fortune 2000 data stored into their warehouse and is constantly acquiring new and more clients. So within the next couple of years, I wouldn't be surprised if we see close to 50%. And at the end of the day, there's more than room for a duopoly between Databricks and Snowflake. But Snowflake is getting cheaper and cheaper and cheaper. I just made a post about it during this call. There's a $10 million insider purchase on Snowflake just happened today at 131. Vote of confidence from the director. I'd love to see it. I don't know where the floor is going to be on the stock. I just know it's going to be an absolutely transformative company in enterprise AI in the next 5 years. So that's why I'm adding every single day of weakness. And there's been a ton of weakness and a ton of FUD, but I'm stoked. I'm smiling. Why? My top dog, CrowdStrike, hit an all-time high today. Transmedic hit an all-time high today. Wow. So now I got to focus on these fire sales that are happening that is going to completely change the enterprise software in the next 5 years. Snowflake, MongoDB, Atlassian is getting so much disrespect. Like these are names in software space that are just going to be the after the winners of this AI modern tech stack. Like there's being lumped into the bucket of software names. Like they're all going to be dead from AI. Like that's not the case. I can promise you that's not the case. There's going to be a few winners out there in the software space because yes, like AI is going to consolidate a ton of software companies, like a ton. Like you can't just go off the basic metrics of dollar-based net retention, free cash flow margins, revenue growth. Like that won't provide you the alpha you need for the next couple of years, because you really have to know the code of the software, the actual use cases within enterprises. Like you have to have a full 100% knowledge of what the company does to figure out if there's going to be an after this winner of this AI thematic. And I'm telling you, Snowflake will be that. Atlassian will be that. MongoDB will be that. And that's why I'm adding these names and these weakness. And all those names are like down like 30 to 40% this year. And that's fine, because I got to focus on adding these high conviction names at a fire sale. While I have my mini monsters like the Rocket Labs, the Jumias, the CrowdStrikes, like they're just hitting like multi-year all-time highs. And like, that's great. That's working. It's making my portfolio be up 6 or 7% this year, while I'm adding these fire sales of these high conviction names. And I'm just like stoked by that, because I've been wanting to like accumulate more Snowflake in this year. I wanted MongoDB closer to $200 and make that a juicy position. I want Atlassian, who has like a stupid rule of 40, like their rule of 40 score is like 20% higher than what their free cash flow multiple is right this year. Like that's an insane sale. So like, again, Snowflake, if you want to be cautious, great. That's great. That's fine. Like when I see blood in the water, I'm a freaking shark. I love to take advantage of it. I did in the CrowdStrike under 100, did in Palantir under 10. Like these kind of moves in both those names, Palantir and CrowdStrike, those people say that was an easy move. That was like where the easy money was made. Why don't you buy it? It's because there's so much FUD out there. People get scared off. Everyone was like, oh, I would love Snowflake under 150. Where are they now? It's under 130. People are scared because price follows sentiment. I said that. And like people are scared and stock keeps going lower. The way to find that alpha is having the conviction, doing the research with yourself in the company, knowing what it is, what it's going to become. And that's when you can take advantage of these opportunities. Like I'm going to be super happy with myself in a couple of years. Like, wow, 2024 was a year I got to load up on Snowflake, Tesla, MongoDB, and now they're all going to be like massive winners in the next couple of years, in my opinion. And yeah, that's what I think about Snowflake. I think love seeing the vote of confidence from the $10 million insider buy today. I think that the data breach, it's all FUD until the company actually makes a comment on it or does a filing on it. Rule of 40 score is my favorite metric, and they have a score of 50 or higher for the next 3 or 4 years. Even with the sandbag guidance, that's a no-brainer. That shows it has a moat. Like you don't score. The way that the Rule 40 score works is if it's a 40 or higher, that proves that you have a moat or a competitive advantage. That's why everyone's goal is for that Rule of 40 score. Snowflake has a score of 50 plus. You know who else has that score? Atlassian and CrowdStrike. Like this is a rare breed of these names who actually qualify for the 50 plus. Those 3 names do. So that's what I'm adding.
And those are based solely on fundamentals, correct?
Yeah, because the technicals are disgusting. Like that's the reason. Like fundamentals is like
that's the full stop. Well, you don't need. That's my point. Is it's based only on the math, you guys. This isn't like I just really like it and I think and I believe. It's like this is just what is. It's kind of the importance we want to drive into your heads. Focus on what is. This is what the company has done. These are the numbers they put up. This is what it's trading at. This is where it's held. This is where it could go. Concrete fundamentals. I think you sold me on that while you were talking. I was pulling it up on mine. I was like, you know what? Like I'll definitely go to the table and eat a little bit if we're talking $1.25.
Listen, if this breaks 100, this will be
because I kept talking. The 130 was.
No, I mean if it goes lower, like I told myself, like if it breaks 100, this is gonna be a 25% position for me. Like I'm very confident in this company in long term. It's just in a full-on AI related investment year, which I love to see. So people don't like the margin compression or like the earning less growth. Like the CFO has publicly stated that like their forecast is all AI related expenses with 0 revenue that's related to those investments. That right there that's a sandbag. Like doesn't matter. Like if you're going to spend $100 million in AI related investment, like you're going to see at least 10% bump in the revenue. Like I'm just throwing out a random number. Like there's going to be a bump eventually, like 100% there's going to be, but they're not guiding for that. And that's why I'm like, they're sandbagging. Like I'm full confidence. I know the product, like I'm long-term vision. That's why being a long-term investor is so helpful during these times, because I could swallow up these like near-term headwinds because I have that long-term vision and I'm taking advantage of the near-term bump along that journey. But again, like I love that you bought it, Os. Like I think Snowflake, there's going to be 10 software names that are going to be winners. Like there's not going to be that much more than that after this AI theme. Like there's going to be a massive consolidation. There's going to be maybe some like really good software players, but there's not going to be winners, software winners from this AI theme. I think there's going to be less than 10. And that's why I'm being very picky. Snowflake will be one of them. Same with MongoDB.
Nice. And Shaquille, thanks for checking in. I'm glad you picked some up too. Smart man, handsome man. Look at you in that suit. So I couldn't agree more. Yeah, I think I don't know. I think that's it. Let's wrap it up. We crushed it. Thank you guys, everyone that followed us, support us. I think we cracked 3,500 today, which is big for this stream. So thank you guys for showing up.
Nice.
Appreciate it. Make sure you hit the Discord link. You want to see what's coming next. We're taking it a layer deeper, give you another deeper level of insight so that you guys can know this stuff and do it on your own, so that when you come to this stream, it's just a way for you to cut down the time on research. So love y'all. Stay blessed now. Bye-bye.